the tax regulations that took effect near the end of last year may present some opportunities for life insurance sales. If any of your clients purchase permanent life insurance with the thought of building substantial cash value, you may want to take a look and see if this change impacts their plans. Kind of the long and the short of it, the short explanation is that the IRS allowed for an adjustment in the prescribed interest rate for making calculations regarding how much money could be paid into a life insurance policy without running afoul of the tax guidelines. So remember, if you run afoul of those guidelines, you may lose some of the important tax benefits that are found inside of a life insurance policy. And of course, some of those benefits are hugely important in some client situations. So if as you go through and you look at your own book of business and you try to determine who else is out there who might benefit from some of these changes, we're all aware of what happened to the interest rates over the last 30 years or so, and we've seen a steady decline in interest rates. Now, declining interest rates, that's a great thing if you're borrowing money. But what if you're an insurance company and you have to make actuarial assumptions based on interest rates that just simply aren't there anymore? Kind of makes for an uphill battle, especially if you're talking about whole life policies. So now when it comes to putting premium dollars into a life insurance policy, the window just opened a little bit wider. The decrease in the interest rate used for making those projections allows for more premium dollars to be paid into a policy, all other factors remaining unchanged. Is that a big deal for you or your clients? Hard to say. Nobody knows for sure. What we're going to have to do is evaluate each case individually and determine what's in the best interest of the client. Throughout the course of the year, I'm quite sure carriers will be busy making changes, making adjustments to their policy pricing and so forth to reflect the 7702 changes. Some policies may see an overall improvement in pricing and others may seem unchanged. I suggest running a couple scenarios for each case, perhaps using guideline premium tests for one, and then run it up alongside of maybe a CVAT illustration to see if which one provides more benefit to the client, especially if you're doing some sort of an accumulation sale. You may find yourself in a position where you could use a larger premium with the same face amount and not create a mecca along the way. But overall, the changes should provide for stronger policies and stronger backing from the insurer. Stay tuned for more information as it becomes available, and I look forward to talking to you soon.